Hi, I'm Hope.
And I'm Larry.
From Under the Median. Today we're going to talk about 10 strategies that we used to pay our mortgage off in 5 years.
How about that?
So first, let's cover a couple of these are like housekeeping details to cover before we get into actually paying the mortgage off early. So the first thing we need to tell you is that before you even get a mortgage, you need to think about right-sizing your mortgage. So what do we mean by that? Right-sizing your mortgage. Well, there are actually 4 things we want you to take into consideration when mortgage shopping. So if you're looking for a new home and you've not purchased one yet, these are 4 different things you might want to think about when it comes to right-sizing that mortgage before you ever take that mortgage out from the bank. First of all, don't take a mortgage out that is equal to the amount that the bank is willing to loan you. Why?
That is a good question. Why wouldn't you? I mean, banks are smart. They know everything.
Sure.
Right?
If they tell you they're willing to loan you a certain amount of money, then you can probably afford it, right?
Mm-hmm. So we did that. We went to the bank and we got the amount they would loan us. And what did we do?
We looked at each other and said, really? They're willing to loan us that much money? I wouldn't loan us that much money.
No, once we figured out what we'd have left in our budget after we paid that, we reconsidered that amount.
And that is called, folks, being house poor.
Yes.
So our advice is to take a look at what they're willing to loan you. It's always a great idea to get pre-qualified, but don't take that amount of pre-qualified money and say, well, that's the size mortgage we should be looking for. Maybe not, because in our experience, the bank is generally willing to loan you more money than you are going to be comfortable getting the bank to lend you. So you are not going to be comfortable borrowing that amount of money.
So what should they do? How should they figure out how much they should invest into a mortgage?
Well, you have to look at everything involved in home ownership. So if you're renting, you're not paying for the upkeep of the place. You're not paying for necessarily the water bill, because a lot of times the water bill will only be sent to the person who owns the property. At least that's what it's like in our municipality. Mm-hmm. So oftentimes there are certain expenses that will happen with a house that are already figured into your payment that you're paying to rent somewhere. So you need to look at all the household expenses, including the fact that renter's insurance is generally far less expensive than homeowner's insurance. So you could even call your insurance company and say, and we did this, here is the price of the house. We don't have a property in mind yet, but what we want to do is sort of figure out about what it's going to cost us for homeowners insurance. Now, when they figure a homeowner's insurance, there are, in fairness to the insurance company, a lot of things that factor in to the cost of that insurance, including the neighborhood, the square footage of the house, whether the house has any safety features like an alarm system, things like that. So they're not going to be able to give you an exact quote, but they ought to be able to tell you in general, in this neighborhood, let's say you're looking at a specific neighborhood. In this neighborhood, for that square footage, in general, this is what you're looking at, sort of a ballpark figure for homeowners insurance. So you want to try to figure out, pinpoint as much as you can all the expenses that will be associated with home ownership that you may or may not currently pay if you rent.
So that leads us to the next point, doesn't it?
The second point is, when you're looking to right-size that mortgage, is save up a 20% down payment. Now, we are very well aware that in a lot of areas of the country, that's a lot of money. Mm-hmm. In the Midwest, housing is very, very reasonable. But if you live maybe on the East or West Coast, the price of your homes is going to be very, very much higher than ours is here in the Midwest. But that 20% figure is there for a reason. The reason it's there is if you pay 20% down, you avoid what is called PMI. PMI is private mortgage insurance. And what the bank does is they say, you know what? We're actually going to insure you against something happening to you before you pay off this home. So it's an extra charge, an extra cost every month. Now, if you already have a mortgage, and let's say you took out that mortgage for less than 20% down, and you're currently paying PMI, what you want to do is watch like a hawk. And as soon as you have 20% in the home in equity, you want to then go back to your insurance company and say, hey, let's have a chit chat because we now have 20% in the house and we own 20%. Can we drop the PMI? And they should be able to drop that private mortgage insurance for you. Larry, the third thing they want to take into consideration when right-sizing that mortgage before they ever get it is...
Well, you want to take out a 15-year mortgage. And, of course, that's going to depend on, how much you can afford and where you're at financially. But that's what we did on our first home. We took out a 15-year mortgage, and that seemed to be a little bit more manageable for us.
Here's the reason we recommend that. Because really, when you look at the numbers, a 15-year mortgage is not that much more every month than a 30-year mortgage. And if you take out a 30-year mortgage and think, I'm just going to prepay, I'm going to attack this thing, I'm going to pay it off early. Sometimes that happens, and sometimes it doesn't. But if you look at the bottom line, the difference between paying that interest rate for 15 years and 30 years is huge. It is literally thousands upon thousands of dollars of additional interest that you will pay if you keep that mortgage for 30 years instead of 15 years. And the final point in right-sizing your mortgage in the first place before you ever get a mortgage is don't buy too much house. This is where we talk about buying a starter home.
Right. And that's what we did. When we first started out looking, we were looking above the price range that we finally landed at. And we had to consider how much do we really need to live in? How much square feet? How many bedrooms? What kind of a neighborhood? You want to consider all those things. And there's a lot of good starter home options.
The idea of the starter home is really, it's almost fallen out of trend in this day and age, but we love the idea. What it allows you to do is go ahead, get that mortgage for far less than if you bought your dream home right away, and then you can attack that mortgage and pay it off and have a completely paid for home. When we bought our first home, it was 2-bedroom, 1 bath. It was built in 1930, and everything, literally, in that house was original.
Yeah, it even had the original electrical. I think it had 30 amp service.
We got ready to move in. I plugged in my Kirby vacuum cleaner and the lights all dimmed. And I looked at Larry and said, we are in big trouble. Before we move in, we're really, I think, going to have to get an electrician over here, and we are going to have to update that electrical system.
Well, then we were having our floors refinished, and the refinisher, we didn't have 220 to the house. So
we barely had 110.
Yeah, so we had to get it completely rewired. So you want to consider what improvements you might have to make to the home you're buying as part of saving up for one as well.
So getting that starter home, our starter home was literally what allowed us to pay for that home and live in it another 12 years. And in that 12 years, all we had to save for our next home was the difference between the value of the first home and the value of the second home. Mm-hmm. That starter home is the sole reason that we were able to pay cash for the home that we are currently living in, because every penny that we sold that first home for, we kept because we owned it. And here's a little thing to think about too. It was a 2-bedroom home. And by the time we moved out of that home, 18 years after we bought it, we did have 4 children.
Yes.
You can live in smaller square footage than you think that you can live in. When we bought that home, we said it's a 10-year home, and it was an 18-year home. So buy that starter home and just know it might get a little cramped in there before you move, but it was worth every penny that we saved by owning that home outright for 12 years.
Well, one advantage of the home we bought, it did have a semi-finished basement. It had one room that was a family room with knotty wood pine. And we ended up converting that room to a third bedroom for the two older boys.
And they were thrilled.
It was a huge bedroom, and they shared that.
Yeah.
So we had two boys in one bedroom, two in another, and us in the third. So basically, we made it into a 3-bedroom home.
All right, so we're going to move along and assume that you have gotten that mortgage. How in the world do you attack such a huge figure as a mortgage and pay it off more quickly? The first question that occurs to us is, should you even pay off your mortgage early? Mm-hmm. We are well aware of sort of the pros and cons and the arguments on both sides of the fence. Now, clearly, we fell securely into the camp that said, for us, it made perfect sense to attack that mortgage, put everything we could toward it, and pay it off early.
Yeah,
and there were specific reasons for that. But here actually are some reasons we think you may not want to pay your mortgage off early. Okay, so the first reason you may not want to pay your mortgage off early is...
And this is very important. If you don't have an emergency fund of, let's say, 6 months, then you should not try paying that off. You need to build up that emergency fund first.
You need to have that emergency fund in place before you really start throwing extra money toward the principal of that mortgage. The second reason that you may not want to pay your house off early is you have other debts. Well, debts sort of fall into two different categories. You have credit card debt and you have student loan debt. In truth, they are both debt. They're both just sort of different forms of debt. The only difference between the two is that in general, those credit cards are going to have much higher interest rates than the student loan debt. And should something happen and you should be unemployed or underemployed, then a lot of times then you can get a waiver on those student loans and have them sort of frozen in time for up to 3 years. So that does make them a little bit different. But our advice is if you have debt of any kind, attack that debt, pay it off, and then keep on rolling and move towards your mortgage and pay the mortgage off. Mm-hmm. The third and final reason why you may not want to pay your mortgage off early is...
Well, if you know you're going to be moving fairly soon, let's say between 1 and 3 years, then it wouldn't really benefit you to pay that off. I don't think you could pay it off that quickly. It'd be a miracle to do it that fast.
That is a point in which it really doesn't make a lot of fiscal sense to pay the first mortgage off when you know you're going to be moving. You have to be pretty sure that you're going to be moving between 1 and 3 years. But in general, you want to be able to stay in that house for a period of time if you're going to pay the mortgage off. Mm-hmm. So why should you pay your mortgage off early? There's actual 4 reasons why we think paying off your mortgage early is just a super good idea. The first one is peace of mind. Nobody can take your house from you if it's paid for.
That is so true. And this became very important as far as peace of mind goes when I was laid off. What was it, about 3 years after we had paid off the house?
The house was paid for. He came home and said, I lost my job.
Yeah.
And when he was on the way out of the office, he was one of 5 people laid off from the firm that day. And he was the only one who, on the way out, one of the other employees asked him, what are you going to do?
And I told her, I said, well, we actually have the house paid off. The cars are paid off. We had no debt. And we had a year's worth of money saved up in our emergency fund. So we could have actually run 1 full year without a paycheck if we would have had to. Of course, that didn't happen.
So he came home and said, I guess my wife's going to have a to-do list for me. She's got a honey-do list. I'm sure I'm going to go home and I'm going to make myself a pot of coffee and start on the list. And I'm going to update my resume.
That was the first thing. Yeah. The next thing was I got 3 part-time jobs. And
there you go.
Didn't even get to go on unemployment.
All right. The second reason why it might be better to pay your mortgage off early is you do save an incredible amount of interest over the life of that loan. Mm-hmm. By paying our mortgage off in 5 years instead of 15, we saved literally thousands and thousands of dollars.
Oh, yeah. I don't understand why people will negotiate so carefully on a price of their home and then only to be saddled with these huge interest rates, which more than eats up whatever they saved in their negotiations. It just makes good sense.
The third reason to pay your mortgage off early is it's just like giving yourself a raise.
I'll never forget Larry.
It's a pretty hefty raise, too.
Yeah, I'll never forget. We used to listen to Larry Burkett. Maybe some of you on the older audience remember him from Christian radio. And one of the points that he made about paying your debts off was that you give yourself a raise. And it's an awesome idea. And that kind of stuck with me.
The final reason you may want to pay your mortgage off early is what happened to us. In case of a job loss, well, then you can still pay your bills, and it's a lot easier to do it if you don't have a mortgage payment.
Yes.
In general, our mortgage payment is the highest bill that we pay every single month. Mm-hmm. So when we got our mortgage, a fire lit under us because we got the amortization schedule from the bank. And I took one look at that row of numbers, and I looked at the interest that would be paid at the end of that 15-year loan. And I said, Larry, there is no way that we are going to wait 15 years to finish paying off this house. A fire was lit in my bones, and we were on a roll to figure out how we could get extra money to pay off the mortgage.
That was an awakening moment.
As we mentioned, we did pay our first mortgage off in 5 years. So we have actually 10 tips for you. And these tips are tips that you can employ too when you are paying off your mortgage. The first most important tip is number 1, and we tell everybody they need to do this.
Now, any financial advisor will tell you to live on a written budget.
And that doesn't mean just write it down.
No.
That means to write it down and use it every month. You need to be living on a written budget. Mm-hmm. We sort of used the written budget and almost rose at times to 10 commandment status in our house. We had some rules in place. Now, whenever you're married, we remind people that you are a team. You are working together toward any given goal. Mm-hmm. So we had checks and balances in place, just like the government has checks and balances in place. We had checks and balances in place. The two executive heads were in close communication with one another. We had monthly meetings where we talked about the budget, and we looked to see if we had any extra cash hanging around we could put toward the mortgage. And we also had an agreement with one another where we would not spend over a certain amount of money without first checking with our partner.
Right.
Now, for us, we didn't make very much money, and our budget was already tight. So for us, that amount of money was $10. That may seem ludicrous to some of you, but you really do need to say, come to an agreement and say this amount of money and no more without checking with your partner first. Now, if you are working, this comes in really handy when you have people who come to you and say, I'm collecting for this fund, or my child is selling this for the school band, or, and sometimes that stuff can be very expensive, and it gives you a great reason to say, I'm going to need to check with my spouse first. And that's a great way to get together and to have your spouse say, you know what? Yes, we have enough money, or no, we don't. And it makes it so much easier for you to go back and say, you know what? I checked with the budget queen or the budget king or my partner, or however you want to put it, and I'm sorry, we've already allocated those funds to different resources this month, and graciously bow out. We had a list of short, medium, and long-term goals. As you might imagine, the mortgage payoff was really, really high on that list, but we also had other goals that we knew we were simultaneously working toward. So that's the other thing that I tell people, a written budget and a list of goals, and you need to have your goals written. It can't be just in your head. You need to have them written out, because there's something that happens emotionally when you write something out and you internalize that goal, and all of a sudden you think, oh, I really, really want this. Writing it out and keeping it in front of you really helps that to happen. Mm-hmm. The second thing you can do to pay off your mortgage quickly is?
stop eating out.
Stop eating out.
And we did.
Now,
that takes up and can take up a lot of money
and
in your
sometimes
budget.
it takes more money up than you think that it does. If you're not tracking your budget on a regular basis and what you spend, sometimes you're spending a whole lot more money eating out than you think you're spending eating out. So we saw the interior of a restaurant. Literally, I can count on one hand the number of times in a year that we went and saw the inside of a restaurant, and it would probably could have been counted on 2 or 3 fingers every year.
It was
we
rare.
simply stopped doing it. Is there anything wrong with having an entertainment budget? Is there anything wrong with eating out? Of course there's not. But for us, that goal of paying off that mortgage rose right to the top, like cream comes to the top of milk, and all of a sudden we thought, that's what we really, really want. So think about what you really want to do with your money. Number 3 strategy is make it a goal, a written goal, and keep it in front of your face. Make sure that you're looking at it a lot. So we have some ideas as to how you can make that into a goal. What are some ways, Larry, that they can put this in front of themselves and say, oh, here it is?
Well, you can track it by making a chart. You can create a countdown. We didn't really have a countdown, but
No, but I really like the idea.
but it's good to track your progress, and we simply were able to do that by what the bank told us we were still owing on the house. And by the way, I don't know if we've mentioned this, but if you are paying off your house, your mortgage, I'm saying early, you need to make sure you're sending those payments to be paid toward the principal. I don't know. Have we mentioned that?
We're going to.
Oh, we're going to.
We're going to go through that in detail to make sure that your bank is crediting it to the correct place.
Yeah.
So the other thing you can do to put this goal in front of your face is start talking about it. Start talking about your hopes and your dreams and what you'd like to do and how that's going to feel to have that budget pay or that mortgage paid off. That's huge, to just spend time drinking coffee or tea and looking into each other's eyes and saying, I can't wait, because that will fuel your fire. Strategy number 4, you can pay off your mortgage early by making it systematic. Now, here's what I mean by that. You should be doing this on a regular basis, or as regular a basis as possible. Now, if you're doing this, it's a great idea to look at the end of the month every month and say, do we have any money left over that we could put toward the mortgage? So how did we do it?
Well, we after she would do the monthly expenses, that's all we would do. We would simply look and see how much money are we going to allocate toward savings. And we still did save some money. But then I would ask Hope, how much can we put toward the principal? And she would come up with an amount.
And here's where I tell you to make sure, first of all, write out a second check, a completely separate check. Don't just add extra money onto your regular mortgage payment, or they are going to credit that toward prepaying your mortgage. We don't want to prepay it. You want to pay down the principal. Write a second check, and in the notation area of that check, write payment to principal only. And then after you've given that to the mortgage company or the bank, I want you to get online and check about 24, maybe up to 48 hours later. Sometimes it takes them a little while to credit it to the right area. Just double check them every single time and make certain that they have allocated that extra payment toward principal and not toward a prepayment of just the mortgage itself. Because you don't want to pay interest, you want to put their extra payments on principal.
And it was really exciting seeing that principal go down, seeing it diminish. When we first started, I thought this was so overwhelming.
Oh my goodness, the first few years of your mortgage, all you're doing is paying interest.
Yeah.
You're not paying principal, and that can be so daunting. But once you begin systematically and regularly to put money toward that principal, all of a sudden it's like it arrives in the mail and you're like, holy cow, this is really working. And once you see it working, you are in.
Yeah. It's very encouraging.
Strategy number 5, Stop shopping. Just stop it. Seriously. In America, we just love to spend money. I'm sure it's like that other places in the world. People just enjoy that thrill of the hunt and of finding a bargain and spending that money. And we love that as much as the next person.
Oh, yeah.
But
when we were first married, we used to attend antique sales and estate sales, garage sales, and we would pick up pieces here and there, things we didn't really need.
No, we didn't.
But they were fun. And we still have a lot of them. But when we were getting serious about the home, we decided let's stop doing those things and find some things to do that do not require getting into any kind of retail shop.
So stop shopping.
That reduces your temptation.
Now, here is a great way to really curb this appetite for buying new things. Before you purchase any new thing, and I did this for years, I asked myself a series of questions. Here's the questions. Number one, do I have enough money for it? How often do you just throw something in a shopping cart and you don't have a clue whether you have enough money or your money allocated in the budget or anything for that item? You just really want it. Mm-hmm. The second question is it in the budget? Whatever category of the budget that item falls into, is the money available in that category to even spend the money? And the third question you always need to ask yourself with every purchase, no matter how large or how small, is how will this purchase affect my short, medium, and long-term goals? In other words, is it really worth it to me? And sometimes if you run through that series of 3 questions, well, maybe it's not worth it to you and you put it back on the shelf. And sometimes you think, you know what? There's money in this part of the budget. I have it available to spend and you can spend it. But what these questions do is free you up from that feeling of guilt. How many times have you bought something and it's exciting when you get it and you get it home and go, oh, that's not as exciting now. Now that the bill has arrived, now that I've set it on the shelf, now that I've done whatever with it, it's just not as exciting as I thought it would be. Go through these 3 questions and it will help you avoid that situation. Strategy number 6 is
watch your grocery bills.
Watch those grocery bills.
Yep.
I have helped people many, many years with saving money and budgeting. And one of the first areas that they can look at saving money in is their grocery budget. You can save more money on groceries than you ever dreamed possible. Now, I really cut down on our grocery bill. I made everything from scratch. I bulk cooked. And one of the other things I did, and this may seem kind of strange to you, but I really hope you find it helpful, is I began to analyze my grocery store receipts. Why would I do this and what was I looking for? I looked at the receipt and I mentally put the items into different categories. And then I would ask myself about each item in each category. Is this item nutritionally dense? Is it just junk food, or is it food that's really going to fill us up and keep us full for a while? Does this item fall into the category of something extra, or is this an item something that we really want and really need? Question number 3, is there a healthier alternative available that would still fit within our budget?
Can I mention something here?
Yes.
One of the things that we changed in terms of to be specific, was a breakfast item. We used to buy boxed cereals. Now, boxed cereals say that they're nutritious. They have a whole list of things that they have to add in because basically they've been processed out. And we switched over full time to cream of wheat and oatmeal. And that's what we still do to this day. They're very nutritious. They're good hot cereals. They're good in the wintertime, but we eat them all year round. And they're inexpensive. There's ways to get bulk oats, and there's ways to get bulk cream of wheat. So that's just one item that we did. We cut those expenses way down because boxed cereals are not only not very nutritious, they're very expensive.
And we made that change during this period of time when I was analyzing the grocery receipts.
Yep.
The final question to ask yourself is this item junk food? Is it food that really, even if I could afford it, I maybe shouldn't be eating it? As a result of this introspection, my grocery budget fell, and the quality of food I was feeding my family went way up. Strategy number 7, sell possessions. We generally have way too much stuff.
Yeah.
We're all like this. And in general, you can go through how many wedding gifts do you still have in your shelf that really it just didn't fit you or fit your decor, but you got it from Aunt Emma, 10, 12 years ago? I think she would give you permission to go ahead and sell that on Facebook Marketplace, and she'd be okay with it 12 years later. So if you have items that are really taking up space around your house, but you don't use them, don't want them, or don't need them, liquidate them, and you can make a lot of money by simply selling possessions.
One of the hard moves that we made was that we sold Hope's car. She drove a Chevy Chevette, and we sold it to a neighbor. Went down to one car, and so the days that she needed the car, which weren't too many, she was a stay-at-home mom, kids were young, she would either drive me to work or I'd ride my bike. We lived about 3 miles from work, so I could easily ride the bike in on nice days. So we did that. I can't remember how long we did it for.
I think it was about 2.5, maybe 3 years before we had enough money freed up in the budget that we finally bought a second vehicle. But it was quite a while. So we have done all of these things that we're asking you to do. We've done. We are not asking you to do anything and make any hard decisions that we have not personally made. So sell possessions that you don't want and don't need. Strategy number 8 is to make use of windfalls. What's a windfall? A windfall is any unexpected money that happens to come your way.
One time I went to work. I was working for a little local company, and they each of us had a $100 check, or not check, it was a bill, a $100 bill taped to our computer monitor screen. And this is before we were saving up seriously for a house. I brought that bill home, and we bought a TV with it. So that's an example.
We would not have done that had we been paying off the mortgage. It would have gone toward the mortgage. So any extra money, while we were paying off the mortgage, any extra money that came into the house went straight toward the mortgage. So if it's a windfall, don't spend it. Go ahead and put it toward that mortgage. Strategy number 9. We sure did this. Plan staycations. I love this word. It's kind of a new word that's been sort of put together in the last couple of 3 decades. A staycation is where you take a vacation, but you stay at home, or you stay at least in the area in which you reside. And we did this for years.
Oh, yeah.
As a result, on our vacations, we still had a lot of fun. We just didn't go far from home, but we found a boatload of free or nearly free activities, and we explored all over the state in which we reside, and we did it for pennies on the dollar without going someplace overnight. If it was in a 4-hour drive from our house, we'd take off early in the morning, spend the day, and drive back late that night.
And we would pack our own lunch.
Yes, we did.
Out.
So staycations, that could be the answer to you paying off that mortgage early. And once again, remember, this is not forever. It took us 5 years, and in the whole scope of life, that's not very long to have staycations. The final strategy we have for you tonight is to cancel subscriptions. What kind of subscriptions are we talking about, Larry?
Well, we used to take the newspaper, the local newspaper.
Do people do that anymore?
I don't think so. Not as much. I know our local paper is kind of hurting. But I know it's very popular to have cable TV. We didn't. Oh,
now you're stepping on a nerve, Larry.
That's a nerve.
Are you telling them that if they want to pay off their mortgage early, they should maybe consider that cable TV bill?
Well, we never have had cable. We never did get subscribed to cable, so we didn't have to cut that off. But that's just one thing, one expense a month that you can take that amount of money, put it toward a mortgage.
There are all kinds of monthly subscription boxes that people have coming into their homes every single month. I looked on Amazon, and there were several hundred monthly subscription boxes that you could get. There are a number of things. There's clothing, there's craft items for your kids, there's jewelry, there's makeup, there's shaving supplies, there's mustache kits for men. There's all kinds of things that you can purchase and have it regularly coming into your home. If you're trying to pay off your mortgage early and you have some of those subscriptions, our suggestion is
cut them off.
Cancel them.
And that's your choice. I mean, we're just giving you suggestions.
We've given you a plethora of ideas tonight. Actually, 10 different strategies that we use. And we hope that if some of these you think, I just really couldn't do that, that's okay. If there's one or two that you think I can't do, take the other 8 and run with them. But no matter what happens, if you are able to utilize some of these strategies, you could indeed be one of those people who is paying your mortgage off early. So what are the results? What are the results of a paid off mortgage? The real results of a payoff mortgage? Well, the results actually are multifaceted. So the physical result, just the here and now result, is that
you look younger.
We look younger. We had a paid off house in 5 years. That's the physical result.
Actually, to tell you the truth, you do sleep easier
knowing
you don't have a debt hanging over your head. And it's a nice feeling. It really is.
There were some other results too.
Yeah.
The financial result was we honestly learned, and I will tell you this very upfront, we learned in a very real way that nickels and dimes do add up to dollars. Because we've never had a lot of dollars, but boy, we had some nickels and dimes, and we pulled them all together and managed to make this happen. So small amounts of money over time do add up to big results.
Yeah.
The spiritual result was that we developed a really deep faith in God and His provision.
Oh, yeah. And God saw us through this, too. I mean, I would suggest with anything, you mix it with prayer and believe God to provide for your needs. And He can also provide for your enjoyment, the joys that you have in life. We just did things a lot simpler while we were doing this.
The marital result was that we learned to work together as a team. We really learned the importance of teamwork, and we had to function together as a unit to make this happen.
We pulled together.
The emotional result was
you learned to be content with what you have.
We really, really did.
Yeah.
And finally, the familial result. How did it affect our family and our kids? Well,
we learned how to spend time together doing things that didn't necessarily cost money. Picnics up on a local park called Grandview Drive, and taking up a wind-up record player up there and going for long walks and Frisbee. And there's just lots of things you could find to do without spending money.
We spend a lot of time with our kids without spending a lot of money. So those were the results of paying off the mortgage early. I hope you enjoyed those 10 tips.